$200 billion. That is how much the president is asking Fannie and Freddie Mae to spend on buying mortgage-backed securities in order to drop interest rates. So, first to start off, this, obviously is going to try and spark more demand into the market. Where at the timing this happens, I'm not sure. I guess it depends on when they start deploying this money. But as far as $200 billion goes, that's quite a bit of money. They don't even have that much money on their balance sheet. So I'm interested to see if they go ahead and call the Fed and go ahead and start printing more money. So that way we can all be paying for pretty much everyone getting a mortgage rate buy down. So what will happen is when they start buying these mortgage-backed securities, the spread between the 10-year and the loan amount, how much the banks are going to, the spread between how much the rate is going for compared to what the banks are charging, that margin is going to compress. Now, at the same time, the 10-year is likely to rise on that, pushing interest rates higher. So right now, currently they're at 6.21 on a conventional 30-year loan. FHA, you're looking at about 5.8% currently. And so what this will do is it'll help bring that mortgage rate down on a conventional. From what the housing analysts I've been listening to, they are predicting that it could push down rates within about a 6 to 8 week period. It wouldn't be a long-term thing. It'd probably last about 6 to 9 weeks, possibly even 12 at the longest, and it would eventually just pretty much pull the conventional mortgage down to about 5.7, 5.8, somewhere in that range for a little bit of time. But then as that time goes on, the 10-year starts going up, pushing rates back up, and it just kind of finds itself at a balancing point. So you're probably looking maybe 5.9, maybe 6, just depending on what's going on in the economy. And then also jobs reports coming out today. The SCOTUS is going to rule if Donald Trump's tariffs are legal or not, and there's already thousands of companies that have lined up to claim a refund check on their tariffs, and of course that's going to be on the back of the American taxpayer. So not only did we pay the tariffs at checkout, but now we are going to have to pay for the refund check, unfortunately. So yeah, let's see what happens with that. But that will probably make the stock market rally in certain areas, a lot of areas where we're getting imports from China. Again, I don't have a political bias. I'm all about economics. I don't care who's in office and what position. It's just the reality of what the actions will cause. So yeah, what we see, and then too at the timing of what all, if it starts coming in February, maybe we'll see a little bit of an uptick in demand come this spring. But as time goes on into the actual spring selling season, April, May, June, we might see rates start coming back up again and finding that balance after that money has been absorbed through the economy or through the market. So interesting times right now. What's going on in the housing market? We'll see what happens. But if you're looking but what this will do though is cause a refi boom. If you are locked in right now at something higher than a 6.5 or 7, this would be an opportune time for you to refi. Start getting your documents together. Start getting your if you can help with your credit score a little bit. I would definitely recommend getting a little bit of credit repair if you have the time, pay off some debt. This isn't financial advice, but just things that I would do personally. And get ready to refinance your home especially if you're above 7. Maybe you can lock in, in a low 6, depending on your credit score. And then also maybe you can get into the high 5s, which would be a good time. So if you're looking to refi, this will be your moment. So I hope you guys have a beautiful day. It is Friday. Let's see what SCOTUS has to say later today. And the jobs report is actually out now, and I'm missing that. So I'm going to go listen to some more things and see how the job market is doing. And let's see how the 10-year reacts on that today. Take care, everybody. Have a beautiful day. Bye-bye.